Hi, Joe. Thank you so much for making out the time to speak to me today. How are you doing?
Trusha, I'm great. Thanks for having me on.
It's the pleasure is all mine. Tell us a little about your journey, so far, and a little about your professional background, so that we can set the context right for our listeners.
Sure, yeah. Especially in crypto, I always find these conversations fun because there's not really a standard way to get in the space, right? So for me,
Right.
I started out, first saw Bitcoin in 2011. I didn't really understand what it was. I worked for the Ron Paul campaign in the United States presidential race in 2012. He was a congressman out of Texas, and he was a big
Mm.
libertarian Austrian economics guy. And so after I saw Bitcoin the first time, I worked for him. And with sort of that life experience and just learning about, QE and monetary policy, and, I was coming of age in 2009, 2010, obviously the financial crisis happened and the Fed was doing a lot of crazy things. And so with that understanding, when I saw Bitcoin again in 2013, 14 during the Mt. Gox bubble, it got me curious, not only because the price had went parabolic, but it was also, interesting from like an intellectual standpoint. And I just started paying attention, reading, and then decided to get involved in the space in earnest back in 2016, 15, 16, helping throw the first Ethereum developer meetups in San Francisco. And so that's how I got my start. ICOs were good to me during those days. I did a number of syndicate funds along the way in 2018, 19. The most notable being for Synthetics, one of the earliest DeFi protocols. Helped the founder, Kane Warwick, develop some of the early yield farming primitives, and essentially established my family office after that. And then now onto Field, which we'll talk about today.
Right. Okay. So, how did you go, say, from investing to building infrastructure? Because, you've shared your journey, and I can see that you've been around for a while. And, your journey, obviously, I like you mentioned, all journeys in crypto kind of start a little unconventionally. But you were primarily investing, and you were, you mentioned you set up your family office and whatnot, and then building infrastructure. How did you, make that leap?
Yeah, that's a good question. And for me, maybe it's a bit of just seeing a lot of the missteps from my founders along the way. It was very early, right? So we were all kind of figuring out like how this was all going to look. Still today, we're getting closer to PMF for the space, but it's still like sort of unclear. In general, as I came at this from an investor's point of view, one, I realized like, okay, I could have more meaningful impact on the day to day of the outcomes of the things I want to and work on and invest, as opposed to just being a passive investor and just kind of calling founders and being in discords and pleading with them to make certain decisions. Which over the last number of years, some winners but a lot of losers, right? And so
Yeah.
with that, I was also thinking about it from the lens of like what's next. So back in call it 2015, when I really started getting involved, it was such green pastures, right, for the space. Like it was only a select few assets. There was significant amounts of potential liquidity that would come down the pipeline for these like very supply constrained quality projects. And so it made sense from like an asymmetric return profile that this was the right time to do it at that era. But now the space has changed a lot, and crypto, especially like tokens and all of that, is kind of like quasi venture, quasi liquid, right? And the space itself has obviously had a huge change over the last couple of years, and prices are reflecting that. And so I was kind of thinking like, what is next? And for me, the light bulb went off back in 2020 when I saw Ripple file for their IPO. Obviously, they got shut down, but it just made
Right.
so much sense to me. And I was like, yeah, this is totally all of this stuff is going to get to the public markets one day. And I thought to myself, how cool would it be to like IPO a family office or something, right? And
Yeah.
Galaxy and Novo, he kind of did that in his own way. Obviously, it's more generalized now and more of a formal company. But it just occurred to me that this is where everything was going. And then in 23, 24, Trump's coming into office. Crypto's really pushing for him. He's really positive on things. I was like, this is the time as an investor to go and make a product that the public markets can accept. And the best way to do that, at least at this stage, is infrastructure. Like the picks and shovels businesses in the space that keep everything going no matter where token prices are and are generating cash flow, and have like KPIs and metrics that public market investors and institutions can understand. And that's kind of how it all came together.
Okay. Yeah, that seems like a very logical way of everything sort of coming together. So tell me a little about perhaps what were the, if because you did start with investing and with Zeal Capital. So what were the kind of lessons that you learned, that kind of still influence your decisions today, and one thing perhaps that you got wrong about crypto in the initial days.
Interesting. That's yeah, I like this. So on the things that still carry over, I had a call with my analyst yesterday, and we had a couple of topics on this that we discussed. I would say one of the things that came out of my most recent thinking is that founder driven thesis is still relevant, right? Like as much as, founders come to you and say like, I'm trying to build this thing, it's always going to change, especially in crypto. Things are so wonky and crazy. You have to
Yeah.
expect that, they're going to pivot. But I
Right.
think when it comes to like protocols, ecosystems, all that kind of stuff, it's about culture, right? And so like the culture of Bitcoin kept it really strong, right? And has a very distinct sort of PMF as it is today because of how people use it. Same thing for Ethereum, same thing for Solana and how they target like their essential markets that they want to like take over and have significance in. And I look at that now as kind of like not only is how the founding team's looking like, how are the people working on the project looking at, how are the community looking like, and then what is the culture around all of that, I think is really interesting. And then additionally, I think it's important to have like from an investor perspective, really good structure, right? Like a financial structure, like a structure of how the whole enterprise looks, whether it's a protocol or not. So, one of the issues that we're dealing with today in crypto is like this whole equity labs co versus tokens thing, right?
Hmm.
Where like, essentially a lot of like public market token holders, I guess open market token holders, not public necessarily, but they're getting, kind of screwed over, right? Like you have all these
Yeah.
lab companies that are like making all the money and, it's very unclear as to like where, the value accrual for the token's going to be. And, there are no enforceability rights, for these token holders. Like for some protocols, yes, they were like, forthright enough in the early days and good actors to try to, make like token voiding and all these kinds of things, but easier said than done, right? In a decentralized protocol. And we're seeing that all kind of happen today. And so, as we were building Field, which is a publicly traded company, this is just how everything is going to look, at least in the short term, where people that are going to, if we're expecting this massive wave of institutional capital to come into the space, they have to have guarantees of like where the economics are coming from, right? And I think that's one of the biggest lessons that I've learned that I'm really sort of implementing today is that it's really important to have the economics really structured properly very early on, but flexible enough to adapt to ever-changing environments. And that's why we think a permanent capital vehicle in a publicly traded stock in which our company, a C corporation, can go and do all the interesting things like within the company, but then it all flows to the equity makes a ton of sense. So those are some of the learnings that I've had for the last number of years, I would say.
Yeah, I think it's like a good culmination of what you've seen and learned over the years, and kind of working towards that. So let's take a step back, and if you had to perhaps describe Field Digital, to a layperson, how would you perhaps describe the problem that it's solving in one sentence?
So it's a two-sided issue, but Field Digital is a crypto native fintech conglomerate that is using M&A to scale. And so that is our PMF. That is our target market that we're building towards. And why this makes sense in a public company is because all of that is wrapped up for our public market investors. So to extrapolate a little bit further past that one sentence, you're able to get access to all the growth stage companies within the space, right? So for instance, if all the stuff that's publicly available right now, the ETFs and Coinbase and all of that, it's kind of already priced, right? And if you want to get access to the really high growth companies, you kind of have to have a buddy that started, his own upstart, his own company, or you invest in like a fund, which obviously you have to be an accredited investor. But if you're someone who wants to get into the space that, maybe has a couple $100,000 net worth, like how do you do that, right? And the way that you can traditionally do that is through the public markets. And so for us, we're able to go and give investors access to that. This product just doesn't exist on the market currently. Additionally, institutions want to get involved in all the interesting infrastructure, the cash flow, all these things, and they need a very strong vehicle with good board representation, with good disclosures, with good distributed management, all these sorts of things. So it checks off their boxes too. And then for all our crypto guys who are sort of in this kind of awkward size, where call it 100 million to $1 billion of market capitalization for their company and potentially protocols in the future, they basically don't have sort of a bridge to the public markets, right? And so we're able to essentially bring them all together in a very interesting, compelling package that they couldn't do on their own. So to be short and succinct, I would say that's a good way to describe it.
Yeah, that is a very compelling proposition to create, I think. So, can you tell us a little about perhaps the USP that you mentioned that you mentioned your moat already, but would you consider something else to be a USP, or is that something that is like a differentiating factor between Field and other infra companies and infra plays, and also perhaps talk a little about the biggest challenges that you faced while scaling a business like this?
Yes. So just to restate the question, it's the first one is what are like the other differentiating points for Field besides being in
Yes.
the US?
Yeah.
So the magic of a public company is the liquid currency, right? So you're obviously going to make acquisitions with cash, but a lot of it is with stock. And yes, that is, a currency that could be monetized in the future. And, there is a bit of, fungibility with all of that. But the other great thing about it is that you have public market multiples. So in the United States, right, like, everyone's like, oh, equities are going super crazy, all this kind of stuff, SpaceX, all these IPOs. The capital markets in the US are the deepest in the world. And those investors are forward looking in their expectations. And so crypto is obviously in a bit of a winter right now, which there are still forward multiples, 3, 4, 5 times in some of these cases. But in the future, when everything starts looking really rosy again, it's not going to be crazy to see 20 times multiples in the future once more. And so with that, there's additional upside that investors can get by investing in the public markets crypto space in the United States today. And with that public currency, essentially the stock, a company, and we are obviously bettering on ourselves, is going to be able to go and execute and acquire and roll up a ton of these assets, which if you did it in like a private equity vehicle, for instance, and you're just purely cash based, it's much more difficult. So that I think is one big differentiation for our type of structure. And then the second question you had was around the difficulties. Yes. And so also to touch on, I guess this piggybacks off your kind of initial comment on the first one, which is moat. I also think like the difficulty in this process is the other moat. So there's obviously going to be competition. M&A is going to happen in the space more. You're seeing it with some DATs. You're like Coinbase is making more selective, I would say, and M&A decisions. But the public markets and the process around that and the whole investment banking culture and all the regulatory processes and all the fundraising and all the marketing and all of this stuff is really, really intense. Like there's a lot to do. It's not just like, look, I love my crypto people, we're hacker kids in garages and making really amazing, interesting, technologies that are changing the world. But, the other reality too is that, putting on a suit and going to the boardroom and convincing these guys that, given all the backlash our industry has had with FTX and whatnot over the years, that you guys are the product and you guys are legit. It takes a different sort of skill set, right? And this is where, to maybe circle back to our initial conversation or the beginning of the conversation, which is like around culture, and maybe sort of apt for the title of this podcast, Living on Blockchain. If we want to get the world to live on blockchain and we want to get traditional finance and Wall Street to live on blockchain, we're going to have to communicate to them and educate them and speak to them in a language that they understand. Like a lot of this is just translation and education. And so for me, one of the surprising things, which I guess not surprising, but difficult things, is just how complex and how much of a slog all this public market stuff is for a reason, because, it's investor protections and all these kinds of things and regulatory bodies. But in general, it's like, this is the moat. Like the hard work here is like, it's just, we've been at this for a year. We're really close to punching everything through, being public, doing all these really cool things. It's not for the faint of heart, like 15-hour days sometimes. And so I think it's exciting though. And I'm really, really happy that we can be on the forefront of these conversations. And so very, very challenging, but I think this is where the opportunity lies.
Absolutely. I think that is what makes being in crypto, being in this Web3 space all the more exciting and dynamic, right? It
Right.
is ever changing and it's ever evolving, and you have to really up your game if you want to stay ahead of the curve.
I
So
agree.
I want to talk a little about going public. So why did you choose to go public via spec, and how does becoming a public company change your strategy a little bit?
So when we were kind of looking at everything last year, the DATs obviously were the theme, right? And you were seeing a whole bunch of different ways to do it, which was reverse merger, microcap biotech stocks. But that's complicated because there's a bunch of legacy liabilities, inheriting an old cap table, and all these governance issues, which I'm really glad we didn't do because now you're kind of seeing all the fallout around it for some of these DATs. Additionally, you could start a SPAC bottom up, but that takes a whole like year plus. There's a bunch of restrictions because you can't identify companies, and for us, time to market is really important. Additionally, you can partner with a SPAC, but again, you're inheriting other economics, and traditional SPAC sponsors are more, I would say, extractive. We're going to stay on and operate. Like this is not. I would actually like move away from like the SPAC language because this essentially is a shell company now. And when we were thinking about like how to go public, we were looking at all these options, and then it occurred to us like, hey, like aren't all these SPACs from 2021 basically failing and about to expire? And we got like a huge comprehensive list of all these SPACs that basically were about to go bust. And so we had thought about like, what if we just take one of these over? We can, get the majority of like the sponsor, and that way we'll be able to, make sure we can control the deal and not have any complications. And then the previous owners, the previous sponsors can have some upside too. And it could all be like sort of a win-win. It doesn't have to be, anything less than positive sum. And so with that, my partner, Mullen Shaw, he knew one of the largest SPAC sponsors from 2021, which was Slam Corp. And it's actually A-Rod, very famous baseball player in the United States. It was his. They raised $600 million and they weren't able to acquire two targets. And so it was about to go and expire. And so we, negotiated a deal with them, and it's working out great for everyone. And so we were able to essentially within 3 or 4 months get our public shell company. So, it is like a SPAC in like its legacy, but in reality, it's just a shell company. All the cash and trust has basically been redeemed, and we are
Right.
focusing on recapitalizing the business through a pipe. And so that's kind of how we came about, that whole process. And again, all these public market issues are quite a lift. And so we were very happy we were able to do all of this. And then, the reasons to go public, I again would bring it back around to the liquid currency, which is being able to have like a permanent capital vehicle where like Berkshire Hathaway is like a big comp to us, right? Where they can go and acquire a number of business lines, do M&A, and then essentially they can use their stock to help buy these companies, right? And then additionally, the public markets are just so much cheaper than anywhere else in the world, right? And so with that, we're able to raise a lot of money to execute on this plan because we think that the winners and losers of this space potentially could be chosen in the next 5 years. So this is all the reasons that we're looking in this direction. And I would say, we're starting with the end in mind, right? Like a lot of people have said like, oh, why don't you do it like in a private equity vehicle and then roll it up public? And it's like, we have to execute today. And we think investors want this type of product, and we could raise money now and we can execute now. And I think this is just time is of the essence, and why we're doing this.
Okay, that's a very interesting take, and I think, I think I agree with what you said. For folks who are going to make it long term in this space, probably in the next 5 years, we'll have a very good idea about the firms that will really set the chain out. So, can you shed a little light about, how does becoming a public company change your strategy when you're building, infra? And what kind of, perhaps you can talk a little about, how, what kind of opportunities does it unlock, or what kind of pressures does it create, if any?
Yeah, all great questions. So the some of the considerations that we need to have with the companies that we're acquiring, we have to obviously buy the deal properly, right? So the economics have to make sense. They have to be cash flowing. Like, sure, there's a lot of companies out there that have crazy forward multiples, and they are essentially promising the world, and it's not here today. But for us, we're really trying to provide like a sustainable product from day one, and so that is also a good thing because it shows all the players that have survived the number of cycles that are able to, basically through their history show that they have staying power. And so I think that's one consideration for us as we go look at target companies. Next is that, this is a public company and there's a ton of compliance. And so there is, the audits and accounting. There is, the local jurisdictional regulatory process. There is the US regulatory process. And so, these things, there's not a lot of companies that can really shine and knock all these things down. The ones that do, though, obviously are super competent. So I would say those are some of the things that come up initially. But on the opportunity side, which is where I like how you're bringing it up, the fact of the matter is that if you want to do business with large enterprises, it's really a stamp of validation that you have a public company, basically background and structure, because they know you're legit. They know you can't, sure it happens, but it's the amount of scrutiny and transparency is so much higher than what we see in
Yeah.
general crypto and private companies. And so, imagine if FTX was public, people would catch
Mm.
on probably a lot faster, and
Yeah.
so
Yeah.
there's probably a reason he didn't do that.
Mm.
So there's a lot of positive things we can do with this vehicle that is really only opportune because we are public.
Right, absolutely. I think you gave a good example, and I ask these questions primarily so that everybody who's listening in does understand the inner goings, of the crypto founder and what really happened in this space and why certain decisions are made. Because I think because the space is still relatively new, and we get a lot of people who are just starting off their journey in Web3. I think this does help clarify a lot to them. So thank you for sharing that. Now you'd mentioned earlier that in crypto, one needs to accept that the vision of the founder would evolve, right? And they would
Mm-hmm.
perhaps pivot over the years. So I'll flip that back at you. How has your vision evolved
Mm-hmm.
since you
Mm-hmm.
started?
Totally. So initially, because okay, look, so I'm a DeFi guy, right? That's kind of my bread and butter. I'm like living on chain. I'm like, doing all the crazy things to like lever
Mm.
this, to pay for that, to do whatever. This is my levered looping account that I'm like earning income from, all this kind of stuff. And so that was initially my thought was, okay, I was sitting, for instance, in one of the largest, well, it was not relative to the rest of its peers, but for crypto, one of the largest investment banks that were focusing on TATs. And I was sitting down with them in their offices in New York, and I was talking to them about like, liquid staking tokens. I was talking to them about like levered looping. And they were like, oh my God, like you can do all this stuff. And I was like, you guys have already raised a couple $1 billion and you don't even know some of these basic primitives yet. And so I really wanted to go kind of down like the long curve of all these kind of, exotic sort of products. But one thing that has changed is that we are definitely more stable with our offering, because obviously, the stock price is going to reflect, the stability in our business lines. And we do think that's a good base to build everything up. And then from there, start having more long tail experiments and just certain things in the portfolio that can be more venture style or more asymmetric in the future. But as I've built this with my co-founders, we have realized that the market is accepting of all the really cool, crazy things that crypto has to offer. Like the world's a very different place than it was 20 years ago. Like everyone wants high returns, no matter what paradigm or regime or monetary policy that we have. And so people will accept us for that. But then we also have to have sort of the barbell of like sustainability. And so, and I welcome that because I know that's going to give us staying power over the long.
Interesting. So, because you've talked about just your journey and the evolution that the space have had, I really am curious. I want to know when people kind of hear crypto infrastructure, what should they actually think of? When they are kind of thinking crypto infra, when they are thinking
Mm-hmm.
infra layers, what would be perhaps the more critical ones over the next, say, 5 years?
I like this. So infrastructure means different things to different people, we've noticed. And I would say that,
Exactly. Yeah. It has
yeah,
so
there
many
there are.
layers, right? There are so many components, and people kind of use this term so much that I think it has lost all meaning.
Mhm. Yeah. Yeah,
Yeah.
totally. I generally, so maybe even taking a higher level up. I usually, when I first start describing it to people, it's really bottom up. So at the base layer, it's bare metal, right? And it's becoming more important as time goes on because now a lot of the hacks that are happening are literally like towards like the bare metal infrastructure,
Yeah.
and so like where are they located? Co-located in the cloud, all this kind of stuff. Like that is like honestly data centers, everything. Compute is like getting more scarce. Bitcoin, miners are pivoting to AI. Like there's actually a huge discussion around that we're seeing around, basically security at the bare metal layer for apps, chains, all this kind of stuff, right? So it starts there. Next up would be like protocol level implementations. So, there's a lot of teams that that basically build and contract with these L1s to basically help, create and build all of this stuff. But then additionally, like there's a lot of protocol implementations and consulting that needs to happen, right? So for instance, if you're building wallets, if you're like a bank that's trying to integrate with like a Solana or like an Ethereum, do you need a white label solution? Like what EVM standards are you going to use? Like all this kind of stuff. Like the teams that build the protocol layer infra are also the ones that are going to build like all this consulting compatibility with all the sort of more bespoke deployments that these larger institutions want. That's the next level. The level after that, I would say, comes in like sort of the networking, so RPCs and all that kind of stuff. How are people and their apps talking to blockchains? No one's just sending one and zeros anymore in bytecode over to Bitcoin, right? And so there's a lot of sustainability there because that is just a whole service that exists that people don't want to deal with, but like the experts on that have economies of scale. So that's the next one. Additionally, you obviously have validators, nodes, all these sorts of things, and the security around that is very important. And then additionally, there's the compliance layer on top of all of this because especially in Europe and SOC 2 and all these things, like it matters, especially in the public markets, and especially if you want to get to scale. One level up, you then get like the apps, right? And so you have wallets, you have front ends, you have all these sorts of things, you have all the libraries and the open source software that puts it all together. And then the next level up, I would say, comes into like the distribution infrastructure,
Yeah.
which goes to like, banking, and it's going to go to like last mile remittances, and then it's going to go to like wires, and it's going to go to like all this kind of stuff, which I think that I would bucket that more as distribution, but there is a lot of argument that I do agree with that is also infra because of the compliance, because of the market structure around it. For instance, if you're doing remittances, there's a lot of, Forex and markets and basically liquidity issues that you need to solve in order to make sure that like USDC can turn into like Mexican pesos, right? And like that infrastructure, it's true that does exist. Even though it's more market-based infrastructure, it's still infrastructure. And so that's like the whole suite, I would say, just like very succinctly. And the things that I think are going to be super important over the next 10, 15 years is the distribution side, because all the other stuff will get
I
built
agree. Yeah.
relative to the demand. So that's how I look at it today.
Yeah, no, I completely agree. I think the distribution layer is going to be the most important layer in the coming years. So, another question: why do you think infrastructure companies often end up creating more long-term value than consumer-facing apps in crypto? Like we've seen many examples where consumer-facing apps, even something that Base came up with, or something like a Farcaster, they have not been able to capture the market for a very long enough time. And this is just again out of curiosity, and you've been in the space for such a long time, so you've also kind of perhaps had a similar observation.
Totally. And I still think it's a bit TBD, but it goes back to where is the value accrual of all this stuff. And maybe I'm
Mm,
dating myself a little bit, but there was a whole discussion back in 2018, 19, I would say, about like the fat protocol thesis, right? And the idea was is that, the L1 tokens are going to absorb everything. Obviously not entirely true because we
yeah.
have, significant amounts of ERC20 tokens and app tokens that have done really well. And, the pump funds of the world and the hyperliquids of the world are obviously drawing significant revenues. And so there was also this argument, and this is what I've coined it to be. I don't know if someone else has said the same, but like the fat app thesis. And so the reality is that like, I don't think it's monopolistic. I don't think any one side is going to conquer everything. Like the space is going to have different flavors and iterations and layers for different constituents and stakeholders, right? Like if you're a bank, that's trying to, I don't know, give like levered loans and just collateralize against Bitcoin and some of these other things, you might not need, the cash flow and revenues of like, a hyperliquid token. I mean, it would help with underwriting of the loan, but like that's more secondary, right? Than it is like, core underpinning of like the business model. And so all these these things can exist, in my opinion, in parallel or together, with different constituents and different stakeholders. And so, but to, I guess, to even zoom it out even further, like where is the mass TAM coming from and all of these sorts of things? I do think that L1 tokens have its struggles moving forward. Ethereum, quite notably right now, is having a lot of tokenomics issues. This is the example that I give. So for instance, so I usually compare it to like the iOS, Linux sort of dynamic. So iOS, iPhones, all that kind of stuff, they have about like 9% of the market last time I checked, like the global market. And Apple is worth $4 trillion. Linux has about like 92%, or I guess, well, like is like 89, 90%, something like that of the market. And their for-profit entity, which is Red Hat, a consulting firm that last I checked, they were worth about $30 billion. And so value capture is super crucial from a returns perspective, but from a usability perspective and a global good perspective, public goods perspective, is like how Ethereum likes to call it. Obviously, those things are a bit segregated and open source generally wins. And so I think, as we discuss all of this in the future, in my opinion, the value capture is going to come from very distinct sort of regimes like tokenomics and infrastructure pieces that have great moats and traditional business metrics. But I do think, for instance, EVM is probably going to be the prevailing technological step for blockchains moving forward. And that is, going to cross over in different ways with like liquidity and, users and all this kind of stuff. And, very broad. And I'm kind of, touching on a lot of points here, but all these sorts of things can exist at the same time. But in terms of returns for investors, you have to be very mindful of all of these things.
Yeah. Where's the value getting accrued? I think that is the most important thing. So one question that I kind of ask all founders and stakeholders is if, what is the biggest perhaps bottleneck that is preventing crypto from reaching the next billion users? And if we did get the next billion users, say tomorrow, what would break first according to you?
Honestly, one of the biggest bottlenecks, I think, is just the liquidity on ramps and off ramps from TradFi. It's gotten a lot better. Obviously, stablecoins are all time highs, but users, investors, they still have to go through a lot of hoops at like writ large. It's easier today than it's ever been before, but the ETFs are sort of the first watershed moment. But if you want to access any sort of financial product in the world, there's so many avenues to do that, and it's very like incentivized to do that. We don't have those paradigms yet, and I see this a lot in the public markets where brokers, investment banks, all these different groups that make money along the way haven't integrated everything yet, and a lot of that is probably, and to your point, around clarity. And so we'll see what happens. If that gets passed in the United States, and basically the biggest hurdle could be this regulatory thing. I think the cat's out of the bag, though. Like, we're going to keep progressing. Things are going to keep getting better. If the White House flips blue, okay, maybe things change a little bit, but like, it's not going to be Gensler era, I don't think, ever again. That being said, if we wanted to add 1 billion people, literally instantaneously, clarity would help with that. Also, too, because most of the global jurisdictions basically model and copy US laws, like VASP and all these things, and so that would really accelerate. And then the second part of your question was, remind me again. Sorry.
The second part was,
what would be the first thing to break?
What would be?
So I think one of the things that's kind of scary and something that I'm thinking about a lot in just the robustness and resilience. So I think a lot of things would break along the way, but the space is very robust, so it would get fixed. So like L1s would slow down, RPCs and messaging and all that kind of stuff would get slower. Apps would have too much overload on the front end. But the thing I think that is the more existential break is that now just like DeFi hacks are becoming so common. And essentially, as 1 billion users come on chain, you can imagine maybe like, I don't know, tens of billions of dollars would come on instantaneously in that scenario. There's a huge bounty for all these nation states and bad actors to go and attack everything. And, I'm pretty sure they already have like attack vectors for a ton of different things that they're just waiting for this moment, probably. Right. And so they want to like optimize, for their black hat activities. And so that, along with AI, all these sort of things is probably the thing that would be, most that test. But I go back to Vitalik's early thoughts, and I do agree, and this is the nature of crypto, but there's the whole thought of progressive hardening, right, where it's kind of like, all right, like, and Nassim Taleb, like anti-fragility, like the more and more you break things but you can't kill it, the stronger it gets. And
That's true.
I know as much as in crypto we want our 1,000x's yesterday, you might have to wait 10 years to see all this like play itself out. So
That is true.
um, yeah, yeah.
Very good points, I think. Okay, so let's change gears a little bit. Tell me about because now you're dealing with institutions. So institutions have been coming to crypto for years now, right? It's been some time that we keep hearing about it, some years now. So what is genuinely different, perhaps, in this cycle at this time? Because it seems like a very it's like crypto winter is right now here, and what has changed over the years, and what do perhaps institutions understand about this space that retail investors just
hmm
don't get?
Yeah. So I had always thought this even back in, pre-COVID crypto era, but the whole like institutions are coming thing, and they are coming. Don't get me wrong, they are coming. We're speaking to them like very directly. But it's, like kind of like what is infrastructure? It's lost meaning. Like what are institutions? It's kind of lost meaning. Like it used to be like a crypto fund. And it's like, that's not really an institution, guys. Like, and it's like, okay, well, how about, this like bucket shop investment bank? And it's like, well, that's not really a strong institution either. What we're talking about now is like, the JP Morgans of the world, the Blackstones of the world, all these really massive conglomerates that have like all the staying power. And so what I'm seeing in that sort of upper echelon of things is a couple points. So one, they've actively been neglecting the space the last 10 or 15 years. Like not just, like we're caught off sides. It's like, no, we can't touch crypto, like fire everyone that even thinks about it in the firm, right? And now you have this mandate from the White House and this global mandate of, okay, like we need to allocate to the sector, and they can't build it. They have to buy it just based off the time that they've neglected everything. And so I think that's a huge change. So right now it's like a little sleepy, maybe a little quiet, we've been saying institutions are coming, but like, they move slow, to be frank, right? And they need like good vehicles and good quality actors to go and invest in. And like, to be honest, like we've seen, especially with all these DATs, like a lot of guys just ended up rinse and repeating the same kind of like let's call it a liquidity event, right? That you see in crypto oftentimes. And so that I think is a distinction that is very promising, because right now obviously things don't look super great in the crypto public markets, but like again, cat's out of the bag. Threshold has been pierced, and it's a lot different than like 2020 when I was mentioning when Ripple was finally to go public, where it wasn't even like possible. Now it's like, it really is time to like start infiltrating and building, for basically the world at large. Additionally, one of the things that I found really interesting and very encouraging that I think your listeners would appreciate is the biggest institutions that we've been speaking with, talking like $1 trillion asset managers, they're actually really smart, and you would think so, and they understand the crypto cycles. They want to execute in these cycles. They want to be a player, and they actually have stronger opinions, and they actually cover the space more than they let on, right? Like you have a few things like the BlackRock Builder Fund, and you have a couple of these investments and whatnot. Some of the investment banks like Goldman, like taking some companies public now. But I would say that it is encouraging as we speak to their analysts, as we speak to, the key decision makers, that they're like, yeah, we understand that the space is going to have some value. They just, not even some, but a lot. They just don't know where to go just yet. And they're figuring that out, but it's coming. And, if they're allocating, basis points on their balance sheets to the space, that's going to trickle down to like, hundreds of billions of dollars. And so it's just going to take some time, but it is definitely happening. And it's encouraging to me because, obviously these are Stanley Druckenmiller has this saying I like, which is liquidity moves markets more than earnings. And, if these guys start moving, you're going to get a re-rating in the space pretty quickly.
Right. Yeah, absolutely. I think it's good for the space if institutions are moving in and, moving in at the right time. So right now, I want to talk a little about field strategy, and then, we can come back to say looking ahead and about the market in general. So you did mention and you did talk about it a little briefly, but what characteristics would make a company field worthy? What do you look for before partnering or acquiring a business?
Yeah. So, we're structuring things in a interesting way, in that basically there are a number of companies in the space that are cash flow positive, that have sustained revenues over the last couple of years. They're not very common. It's not like everyone's always making money all the time, but there are very, very good niches. that they've executed very well in their PMF, and they've owned that particular part of the space. And we want one, obviously, like, penetration in the market, Lindy, PMF, all that kind of stuff. And then more sustainable ARR sort of revenue user base. And we're seeing that over the last 2 to 4 years for a lot of these companies, which makes sense because that's when things like really accelerated post-COVID. And then from there, how are they using their earnings, right? So, okay, they have all this EBITDA, great. Are they reinvesting it? Are they just sitting on cash? What are they doing? And do they have aspirations and growth plans past just where they are? A lot of the founders that we're seeing right now. So one of the sort of a thesis that I have in all of this is that there's a huge demographic change that's happening within crypto. And basically all the kids like around my age that were in their 20s and early 30s, 10 or 15 years ago, are starting to age out. They're having kids. They need liquidity. They need to start, figuring out what is next because they have spent all their time focusing on one particular vertical that's cash flow positive to survive, which good on them. And they've executed on that, but the space is moving so quickly. Like, you can't have a sustainable business just off one product, right? And so they want to raise more money to go and execute for this next wave of like just essentially blockchain application, which is probably going to be like Main Street, Wall Street users, like, traditional RWAs, financial products. And the founders that have all those sort of historical metrics that I've stated, but this drive to go and like pursue more is exactly what our investors in the public markets want. And so that's kind of how I look at it, from the outset. And then from there, as they kind of build towards like essentially what their new use cases are going to be, like, can they then have essentially cross-pollination and revenue synergies with the rest of our business lines? Right. So we're looking at banks, we're looking at neobanks, we're looking at networking providers, we're looking at wallets, we're looking at, again, bare metal. And so like, can all these guys sell to each other? And what's great about that is that obviously our subcos will be, essentially focused on, their particular business line, but then we all share the benefit of a company system flow up to our stock and we all win together. That's one of the ways that we're really like modeling everything out and how things are going to look.
Okay. So my next question was going to be about, why is consolidation the right strategy for crypto today? But you've kind of touched a little on that already. If you'd like to talk a little about that, that'd be great. And maybe I can key in one more question here, that crypto infra, again, here, today still feels very fragmented. So what is perhaps the biggest, friction that, you're trying to eliminate?
Yeah. So the biggest friction trying to eliminate, there's honestly a lot of these founders are just trying to build and execute on the business, and they want to do more than just like the constant marketing and constant sort of VC venture cycles to raise more money to get to the next thing. Because if you think about it, a lot of these cap tables are venture or privately held. And if they want to go and accelerate into, basically TradFi and, all these like cool new things that are happening, they would have to like kind of do a roadshow almost like every year or two, which, most founders will tell you, and people that worked around the founders during these like fundraising cycles is crazy distracting. Like there's a lot of companies that exist today in the world that like, they spend less time building out the business and more time fundraising, right? And so a lot of our founders really just want to go execute on the business. And then for us, the friction that we're removing is that the permanent capital vehicle of the public markets and our stock, and just having access to capital markets at large, we are the permanent provider of capital for them to go and exercise, their business plans. And so just kind of like how Warren and Charlie, did it with Berkshire for a long time. Obviously, strategy is important. Obviously, making sure that, the managers and the businesses like all execute properly. But, you need to go raise a bunch of money for a data center. Like, okay, we can go do like at the money raises. We can do, debt capital markets. We can do all these sorts of things. And our founders are just so excited about this because they're like, oh, you guys can like just handle that for us and we can execute. That is one of the big frictions that we're removing that altogether is very positive for everyone.
Okay. And if you had to perhaps talk a little about, the funding that is being received at the moment in the market for certain niches, which category do you think is receiving far too much funding and which is still being, left out and about?
Interesting. So too much funding. I mean, probably prediction markets, to be honest. I think, it definitely is going to be a game changer. It definitely is, going to have massive implications not only to markets but just culture and just users and user habits. But in general, prediction markets are making a couple hundred million a year, and there's been I think 20, 30 billion of financing or something like that, which those revenues have to obviously catch up at some point, I think. And so that's probably the most overinvested, the most underinvested. I think for me, one thing that I'm trying to pay more attention to is the sort of more niche like DeFi applications that already like kind of cash flowing positive, but they need like big liquidity injections. And traditionally that's come from like market cycles. But like, for instance, the thing that comes to mind is like structured products. And there's like a lot of interesting things that are happening in that space where they're building out, all the tranches and all these sorts of things, but they just don't have the users. And so that's going to change one day. People are going to start coming in and using all of that. And, what is the bridge? What are the connective, tissues that make all of it work? There's probably a ton of things we're doing that could be super helpful there. But it's probably been underinvested because, again, just general investors in markets at large, they're not going to spin up a wallet, on a hardware wallet and connect to MetaMask and, plug into all these sorts of things. I also think too that given just relative to AI investment at large, I think crypto AI has gotten investment, but it's probably underinvested relative to obviously the trillions of dollars that have been happening within public markets and even the private markets as well. So those are the couple ones that I look at, and I'll speak to opportunities, to be honest.
Right. Yeah. No, I think this kind of leads me very well into what I was going to ask you next. So I do want to ask you about AI and crypto, and what is your take on that? But before that, I have a question about Field. If you succeed, what does Field Digital look like, say, in 5 years? Does it look like, Berkshire Hathaway for crypto, or a Blackstone, or does it look like an AWS, or is it something entirely different?
Yeah. So that's a great question, and it's interesting because we are an M&A vehicle, but we are at like in reality an operating company, and we are basically using M&A to put all the business lines together to go and build the future of finance. A really good sort of comp that just happened to all of this is like SpaceX, right? So they have Grok, they have obviously SpaceX itself and rockets and everything like that, and then X as well, and they're acquiring more AI like Cursor, and all these things are existing in like a holding company structure. But then the whole thing is a operating entity that Elon's like having data centers in space and Grok in space and all these sorts of things, right? And so for us in the next 5 years, we are going to be what we're betting on and what we're very bullish on, very cash flow positive, as we're buying businesses right now that have durability and sustainability. As the crypto cycles come back, we're going to see not only a increase in revenues, but we'll also see an increase in multiples, right? And so that's going to look good on everyone in the space, and then it's going to help us have more of a liquid stock to go and do more acquisitions. And so we're looking at different geographies, we're looking at different banks, we're looking at different neobanks, and we're basically putting all these things together. Where zooming out 5 years, you'll see an extremely cash flow positive enterprise that has this really powerful public stock with good governance, and everyone has confidence and faith in that we can then go and just go and support all our business lines all over the world, and everyone can have access to the very interesting businesses and use cases that Field will provide. So that's one. And then the second one was the AI question, correct?
Yeah.
Crypto and AI. Yeah.
Yeah. So AI and crypto, basically, they're being increasingly mentioned together, right? So which intersections do you think are genuinely perhaps inevitable, and which are the ones that are just there for fundraising? And does AI really help make decentralization more important, or do you think it is working against it?
I think it does. I mean, I think it's going to converge significantly, but I think, most people are fundraising just off the hype. And so, we'll see. There's going to be definitely some really great winners that come out of all of that. But in general, the thing that I am most bullish on is decentralized compute for AI. And so we have actually been thinking and looking at a lot of data center opportunities for Field. And so we've come across just a ton of managers, a ton of brokers, investment banks, and people that are just really focused on, particularly the data center space. And then, there's a few crossovers to crypto and all of this, obviously, with Field's mandate. And the things that we see, particularly, are decentralized compute making its way to essentially blockchains, where for instance, Tau is probably the biggest one that is the most interesting in all of this, where, you're already seeing, all these hyperscalers, really just oversubscribe to all the data center build outs. And, we have a compute constraint like significantly that doesn't seem like it'll slow down. I think CapEx wars will slow down. You're starting to see it a little bit, like Meta is starting to do their like sort of like cloud compute sort of thing that they're getting into. But if that's the next step, and basically they're letting the market use all the compute with the LLMs to figure out what their application is, like it doesn't need to be owned by anybody, and we are going to have like a market discovery tool to which like who has the most available compute at the best prices. And is it going to be just like a bunch of data centers that are privately held? Like if you can break through into a decentralized model and just tap into essentially the cloud, which is the next step of what Meta is offering, why not have that live on a blockchain? That's essentially what Tau is doing today. But I can already see just how Bitcoin miners are pivoting away to just dedicated solely to AI. They'll come back around and they're like, oh, wait, if there is a way to provide the compute and then go and, monetize it through tokens, or not AI tokens, but rather crypto tokens, or, some sort of economics there, it could be really interesting. One of the other ideas that I think are fascinating too is physically settled compute futures, which we're seeing a bunch of startups focus on. Yeah. There's a lot of startups that are focusing on this from sort of a cash and carry, or sorry, not cash and carry, but like more of a derivative perspective. But again, the physically settled is going to be really interesting, and like you can actually deliver that with like a blockchain. And so seeing some projects work on this, and so that's where I can see the convergence like very obviously work out over time. And then there's going to be a bunch of other things too. Like, I mean, we're implementing AI significantly into our business where, especially like our on-chain solutions, the routing for price execution.
Right.
You also have like on-chain data providers that have all this legacy history of transactions and wallets, and, where people are pinging from RPCs and their IP addresses. There's going to be compliance issues and all these things. We already have sanctions, and we're in a global war right now. And so having AI basically build all these large model data sets, like crypto is perfect for that, right? And so there's a lot of crossovers and synergies. It's still TBD. I think the emphasis is more on AI, but I think there's a huge monetization capability that crypto can give to AI, which AI is kind of lacking right now. So yeah, as we're talking it through, that makes total sense to me.
Yeah, okay. Absolutely. Okay, so now because, we're running very short on time, I want to ask you, there were so many other questions, but I would definitely be remiss if I did not ask you this. If there's one major piece of advice that you'd like to perhaps give, founders that are working in this market, what would that be? Is there a resource that you would like to recommend, a book, or just, general advice from your experience?
Yeah. I think being extremely resilient to like the rejection of the space is incredibly important, because I said this in another podcast actually, but crypto is like a cockroach's paradise, right? And so like, there's all these nuclear events happening like all over the place. And if you can just like survive and then like keep pushing it and really like power through, like I really believe that like the space has the ability to figure itself out and give you the opportunities. And so, I think we've all been a little bit deluded over the last couple cycles because people have gotten so rich so fast. And it's true. Like there is a lot of money that cycles in and out, but there's also a lot of like horror stories along the way. So like, when people feel down that like things aren't happening, it's like you're still in the game, and like to keep pushing through and to keep like working towards it, because, it's just going to take some time. But like, if we all believe, and this is what I tell, a lot of investors, like, do you believe in programmable money? Of course. Right. And so if that is the future, and if that is the reality, then like, stick it out, push through, figure it out, and it'll be rewarding. So
Yeah, just stick it out. I think this is something that I tell a lot of founders as well, that you have to not let the noise get to you. It is important that
mhm.
you keep building, and it doesn't matter if you're pivoting, and as long as you're trying to find the product market fit, and you're really solving a problem that a lot of people will pay for. I think the fundamentals in crypto and running a normal business, the fundamentals remain the same, even though in crypto things are
Mhm.
very dynamic. And what you said, it's like a cockroach's paradise. I think that's the best way to put it. That you just have to survive. With everything breaking and falling apart, you just have to survive. Okay, so that's very good advice. And on that note, I think I would definitely like to ask the one question that I ask everybody who comes on this show, and we can wrap this up with a few last words. So this one question is, if you had to give advice to folks who are still looking at Web3 crypto, and they still have a little bit of skepticism around it, what would be your advice there for them to start exploring this space and start living on blockchain?
Mhm. Yeah, I would say, think about, for me, I always like try to remind myself that we're living in sci-fi. Like, as much as this is just the day to day, the amount of progress that humanity has had over the last couple hundred years is really insane compared to the last couple thousand, at least that we know of. And so, if you can believe and look at what crypto is today, and given that like 10 years ago, it was considered, totally just fake and, totally just not even viable in any capacity. But obviously today it exists everywhere. It's like something's working, right? And so I would say to stay encouraged and look at the things that are working and not be, basically too confused with token prices. Because Jeff Bezos said this too, but like, are you 10% smarter because you made 10% more money today, right? And so it's like, look at the base things that make sense, and see the growth that is happening and play around with it and expand. And like, on the big part of all of this is like the experimentation. Like, if you have a niche interest of like gaming and blockchain, like go and play around with things. And like, not everything's going to work, but like someone's building it, and maybe you could be the one that builds it too.
Absolutely. I think that's good advice to leave our listeners with. Thank you so much, Joe. This has been a wonderful conversation. Is there anything else that you would like to add? Any parting words before we wrap this up?
Just keep an eye out for Field Digital. We're making big moves, and we'll be in the public market soon. So just keep it praised. We have some fun stuff and really game-changing things that are coming down the pipeline. So
absolutely, I'm very excited actually, because what you have is a very unique proposition, and I'm sure that a lot of people would be interested in looking and dabbling with it super soon. So thank you once again, and it's been great chatting with you. All the best for Field Digital and all your future endeavors.
Likewise, Trish.
वीडियोस बनाने हैं, फिल्मोरा है ना।